Hey everyone, and welcome back to the channel. Today we're diving into a topic that's got a lot of people talking, a question whispered in boardrooms and debated in newsrooms. Could 2026 be the year another global recession hits? You know, every decade seems to bring its own economic storm. Think 2008 or even the dot-com bust. And now, economists are pointing to 2026 as the next potential turning point. With rising global debt, growth that's slowing down, and the massive disruption from AI, it's natural to wonder if we're heading for some choppy waters. So, grab a coffee, because we're going to explore the big question: will there be a recession in 2026? Now, before we get too deep into predictions, let's quickly define what a recession actually is, because it's more than just a scary headline. When we talk about a recession, we're looking at a significant decline in economic activity across the whole economy, usually visible in things like GDP, employment, industrial production, and real income. It's not just a little dip in the stock market. It means job losses where people are struggling to find work. It often leads to higher prices for everyday goods, making life tougher for families. And crucially, it causes a big drop in business confidence, making companies hesitant to invest, expand, or hire, which then creates a ripple effect throughout the entire system. Think of factories slowing down, shops seeing fewer customers, and a general sense of uncertainty. So, the real question we need to ask ourselves is, are we seeing these early signs right now? Are the pieces starting to fall into place for something bigger? Let's take a closer look at the current landscape. All right. Let's talk about the big red flags, the warning signs that have economists a bit concerned. First up, inflation. While it's finally easing in many parts of the world, that relief hasn't come without a price. Central banks globally have been aggressively tightening monetary policy, meaning they're raising interest rates. This is like hitting the brakes on the economy. It makes borrowing more expensive, slowing down spending and investment, which can cool inflation but also slow down growth. Then there's debt. The US and the EU, two massive economic blocs, are sitting on record-high debt levels. That's a lot of money owed, and it can become a huge burden, especially with higher interest rates. And finally, global growth itself is slowing down. We've gone from a relatively healthy 3.5% just a few years ago to barely 2% now. When the global economy isn't expanding robustly, it makes everything else feel a lot more fragile. So to sum up these big warning signs, we have high debt, high interest rates, and slower growth. These three factors combined paint a picture that needs our careful attention. Now let's zoom in on a major player, the U.S. economy. It's no exaggeration to say that what happens in America profoundly impacts the rest of the world. There's an old saying, if America sneezes, the world catches a cold. And it really holds true for global economic trends. Right now, the U.S. is facing a unique set of circumstances. We're heading into a major election year, which always brings a degree of uncertainty and political jockeying that can sway markets. On top of that, some experts are looking at certain sectors, especially in tech, and wondering if we're seeing market bubbles starting to inflate. When valuations get incredibly high, there's always a risk of a significant correction. So if the U.S. economy, the engine of so much global activity, starts to hit turbulence, especially with elections on the horizon and potential market overheating in tech, 2026 could indeed be the year where that correction really makes its presence felt globally. But it's not just the U.S. we need to watch. Asia and Europe are crucial parts of the global economic puzzle. And they, too, are facing their own unique challenges that contribute to a potentially dangerous global slowdown mix. In China, which is such a massive manufacturing powerhouse, we're seeing a slower-than-expected recovery in that sector. This isn't just about China. It affects supply chains and global trade everywhere. Meanwhile, Europe is still grappling with the lingering effects of energy crises, which have driven up costs for businesses and consumers alike. On top of that, many European economies are struggling with weak export numbers, meaning they're selling less to other countries, which hits their domestic production and employment. When you combine China's manufacturing struggles with Europe's energy woes and export challenges, you get two massive economic regions that could amplify any global downturn. It's a complex and interconnected web, and weakness in one area can quickly spread to others. Okay, so we've heard a lot about the potential storm clouds, and it's natural to feel a bit concerned. But here's the really important part. Every downturn, every period of economic uncertainty, also creates incredible opportunities. It's not all doom and gloom. Think about it. During tough times, innovation often accelerates. Companies are forced to become more efficient, to think outside the box, and to truly adapt. We saw this after the 2008 crisis, where many of today's tech giants really took off, reshaping industries and creating new ones. Right now, sectors like cutting-edge technology, artificial intelligence, and green energy are booming. These industries are driven by fundamental shifts and needs, and they have the potential to rise and thrive even if the broader economy experiences a slowdown. Smart investors understand this. They don't panic. Instead, they prepare. They look for the areas of growth, the companies that are solving real problems, and the technologies that are building a better future, regardless of the immediate economic climate. So remember, smart investors don't panic, they prepare. So, will there be a recession in 2026? Honestly, no one can say for sure with 100% certainty. The global economy is a massive, complex system with countless variables, and predicting the future is always challenging. However, what we discussed today highlights that there are significant warning signs and a confluence of factors that make 2026 a year worth watching very closely. But here's the key takeaway, and it's a positive one. Those who stay informed, who understand the trends, and who prepare for different scenarios are the ones who will not only survive but truly thrive, no matter what economic conditions come our way. Understanding these dynamics is the first step to making smart decisions. Thanks so much for tuning in and joining me on this deep dive into the potential economic landscape of 2026. If you found this discussion valuable, please give this video a big thumbs up and don't forget to subscribe to Finance Discovery. Our goal is to help you decode, learn, and grow your understanding of the financial world, so you can always be ahead of the curve. Your support means the world to us.